Good morning. Welcome back to another pre-market analysis live stream. My name is Franco. This is Trading Futures Live. Let's jump right into the content. Let's check the economic news for the week. Very important week. We will have CPI on Thursday, but let's review the entire week. So today we don't have much. We do have this employment trend index that has a very low impact into the market. Then we have Brainard speaking. Not much impact today. Then tomorrow we have Redbook, very low impact. And consumer inflation expectations. I think the Fed is watching this closely. And then we have a master speaking tomorrow at noon. Then Wednesday, Columbus Day, market is gonna be open regular. There's nothing. There's no hours affected. Then we have mortgages numbers on Wednesday as usual. PPI. Okay. Producer price index. There you go. We have Wednesday inflation numbers. And then on Thursday we do have the most important news, the CPI. Okay. So I wouldn't be surprised if we have a chop week until Thursday. Then on Friday, retail sales month over month and year over year, inflation expectations, and the CFTC reports that come out on Fridays as usual. Yo, Paolo, good morning. Morning all. All right, so let's review the dollar. Let's start with the dollar as usual. I don't know why I'm having troubles with the bond yields data here. So I had to pull up my trade station and check on the bonds because the bond yield chart it was not possible for me to check. All right, so the dollar is going slightly up today, nothing major, like 0.25%. If you guys see here, as usual this year, the dollar is going up. Now we did have some volatility here. If you compare this retracement, was a lot more volatile than previous ones, right? So that tells me that we might be close to a very important area of supply right now. Okay, it's not usual, it's not normal that the dollar goes up 17% in 1 year. That is pricing in some sort of major economic news event, right? We don't know yet, but this is what the dollar is pricing in, some sort of either recession or some change in the economy. Okay, if we go to the lower time frame, here we did have this sort of resistance, and we came here during the London session, and we are retracing back down. Now my first demand right here is this one, right? I do have this pivot. This is not my favorite because of the location. My favorite will be Fridays right here, this one. And I do have a lot of pivot support in that area, right? So why I do say we might have a choppy week or a choppy couple days before CPI, because the chart of the dollar is telling me that there's not much here. For the markets to move, the dollar has to come back down to demand, and the demand is not very close. If you guys see, it's almost half of a percent here, okay, or a little bit more, like 0.6%. So if we have this sort of movement here, we might have a retracement to the upside on the equity markets, and it's yet to see if these demands will hold. Okay, The high quality thing is down here. Okay, but we're too far from there. Okay. Nevertheless, the dollar can continue going up, and we can have more downside on the equity markets. But for now, I'm accounting for the dollar to start chopping around at least a couple days, right? And I will treat the equity markets the same way. I will um, expect a sideways. So I will be playing tradable reactions mostly, and no more than 3 to 1 on my risk and reward ratio for now, until if I see some changes, then yes. All right. Regarding the bond yields, this is the thing. I had the data up to uh, October 7th. So I had to pull up my chart here. Um, so this is the bond chart. So this is right the opposite of the bond yield. So if this thing goes down, it's because the yield is going up, right? It's the opposite chart, but it's exactly the same chart, right? So I can see here how we are not even breaking Friday's high on the yield, meaning we haven't broken the Friday's low here on the bonds, right? All right, so I do expect this thing to just hold here in this chop, this box from Friday, until we break this. I wouldn't consider any sort of direction to be clear, right? So here the bond years in supply, bonds are in demand. Here the bond years is in demand, the bond itself is in supply, right? So the way I use the bond yield is, if the dollar and the bond yields are going in the same direction, then I will play the NQ in the opposite direction. Meaning, if the dollar and the bond yields are going up, I will play a short in the equity markets, right? So for now, just chopping. There's not much information that I can get from this chart. Chop, chopping the dollar, chopping the yields. That tells me that the market might be chopping the entire session today until we have a breakout. Okay. Now the VIX is a very interesting chart right here. So we gapped up. We gapped up on fears that probably the markets will go down, but we came down yesterday. Now the market is recovering a little bit, right? But we gapped up. It looks like the VIX wants to close the gap, and I had this supply. There is a lot of supply in this area. We have two engulfing candles to the downside, so there's a lot of supplies in this area. And if you guys see, this is a cyclical chart. Um, we have been here like since January, right? When peak fear was hitting the market in January, we came to 39. So we are at 32 right now. Is yet to see if we're gonna break. It doesn't look like we're going to break. So this tells me two things. Number one, investors are not panicking. And number two, we might have a continuation to the downside, but a very slowly pace. Okay, not something that will just disrupt the market, the entire market. Okay. Yeah, the 10-year yield, but I'm having troubles. Either I check the market watch data, there is no data. I check the CNBC data, there is no data for the yields itself. So I had to go and check the bonds. Um, I don't know why. There's something wrong with it. Probably the CME doesn't have the, because this is a futures chart. So this data comes from Chicago. So there might be some sort of problem here. So, but today I will be um, looking at the bonds itself on TradeStation. All right, CL, huge day on Friday, almost plus 5%. We came to my supply. Now we're starting to retrace back down. We're holding the supply still. So the market is just opening here at 9. I would expect a comeback to this rally-based rally from the supply for a few reasons. So we have broken the trend line here from few days for few days, right? And we just broke it. Um, I would like a comeback here for a demand right here where the breakout happened. Okay. If we have a comeback, we can go lower on time frame and see. The rest of the commodity. Let's check the rest of the commodities. Silver is coming out pretty nicely from the supply. Gold as well. So these two charts on metals are inversely correlated with the dollar, right? Not 100%, but since they are priced in dollars, most of the all of the assets are priced in dollars. So when the dollar moves up, there is some sort of effect that creates in the especially in the commodity markets. Okay. Pretty mixed up day in commodities. So you have copper going up, and metals, these two, and the silver and gold going down. All right, regarding the ES, this is a 3 hour chart. This is a pretty interesting chart. I don't use a 3 hour most, but let's go to the 4 hours. So one thing that got my attention is this. Yes, we did have a very ugly Friday, but we didn't manage to break the 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 low of the week. And that low of the week is even overnight. Okay? So that tells me that the momentum, this negative momentum, couldn't break this. That doesn't mean that we're gonna go to all-time highs from here. Oh, this is the ultimate low. But if we don't have a catalyst to break this low, um, it might be, but it doesn't make sense. Futures markets are working, right? It might be that. That the banks are closing. But if you see the 10-year treasury bond is being traded, here it is, right? It's moving a little bit. It's choppy though. Now, I didn't see any bank holiday here today. Does it say any bank holiday? Are actually banks closed today, Stack? It doesn't say any bank holiday here. Who knows? Columbus Day isn't it Wednesday, 12th? Yeah, I think it's a 12th. Oh, let's do this. Let's go here on the 12th, October 12th, U.S. Doesn't say bank holiday either here. Let's Google that. That's important. Oh yeah, yeah, yeah. Look, yeah, yeah. Banks are closed. Yeah, there you go. That might be it, but it doesn't make sense. This data comes from Chicago, but yeah, that might be it. And it's weird. Here we didn't have a bank holiday thing. Let me see. There we go. Here on Forex Factory. Yes, we do have the thing bank holiday. There you go. All right, so that might be it. First time I see that, but yes. Thank you anyway, bro. Um, All right, so I was talking about the ES. We never broke the low from the week, right? So even though this was overnight, we managed to hold right there. And yesterday, on the open, we gapped down a little bit here, and we came to this drop-based rally created also overnight at the beginning of the week, Sunday, right? This is Sunday of last week. This is Sunday of this week. I mean, yesterday. So I think we're holding here pretty good. Probably the market will chop around the entire week, and then with the CPI news, we will have a clear direction, right? And I don't think it's there's not much here. I do have the demand at 3607. The first high quality supply is 3636, 3736 on the ES, so it's pretty far. Same chart on the NQ. Actually, here on the ES, I think I oh no, it was in the RTY that I found this supply. So if you see the RTY, it has a narrower range. If you see here, it is close to the main supply. If you guys see here, the pivot, we're trying to push up, and then we broke down from the pivot. I'm expecting a retracement to this pivot. So if you guys see this pivot here, is way higher on the ES, and it's way higher also on the NQ. So on the NQ, we do have a couple of supplies before that pivot. There's nothing on the RTY. So if the RTY gets to this supply, we might have, there are two scenarios. Either this supply drags the other markets, or the RTY is gonna be dragged to the next area. Okay. So, but I want to pay attention mostly to the ES, which is the broader index, right? So I want to see, I have nothing like high quality. Everything was like from Friday. Even this one, we can pay attention to this one, but it's not my favorite. I like this picture on the NQ better. So if we go to the 5 minutes, I will put something like, there you go. And it's very far though. It's not close. 37.10, like it's 50 points away. So we might have a bullish day just watching at this chart. There's nothing, there's no information. Okay, the bond yields are moving up, the dollar is moving down. Sorry, the bond yields are moving down, the dollar is moving down. So we might have an update today. But I do think I'm gonna be neutral the entire day. So this is the first resistance on the ES right here. Okay, 36.90. So the same picture on the NQ. This is the area that I was talking about on the ES. Is far. Is 200 points away. So we might have a bullish day today until we grab some supply, right? All right, so that's the RTY picture. We already saw it. So that's it for me. Mostly neutral. I will play only tradable reactions, no more than 3 to 1, right? The dollar is sideways. Actually is coming off of one supply that we had here, right? And still holding this London Open, but we need to see price action today. Okay, there's nothing clear from the dollar or the yields. Okay, so I want to pay attention to the price action during the day. Okay. Also, we do have a PPI on Wednesday, CPI on Thursday. So there's a lot of things coming this week. So I'll be very patient today. Okay. Tradable reactions will play the range, and that was it for me today. Okay. I'll see you guys in 15 minutes for the live trading session. Later.